The world as we know it is changing. We're not just talking about a market dip or a few bad quarters. We're talking about a fundamental shift in the very order of things. And one of the most respected voices in finance is sounding the alarm.
I agree. I agree with the problem. Okay. I am very concerned about the solution. Okay. The practicality of the solution. In other words, I think that this is going to create not only the problem, the capital markets problem that I'm talking about related to prices going up, costs going up, prices, revenue going down, and capital problem. But I also think that this is going to create great sand in the gears of production worldwide. As we look ahead in the months ahead, we have to get the budget deficit down to 3% of GDP. I worry about that at the same time as this is happening. These are not easy problems to solve. I'm concerned because the bigger problems exist. The debt exists. You can't get around the debt. The overspending exists. You still have that. You still have that competitiveness issue. These have repeated throughout history. We're in a period that's very much like the 1930s.
That's Ray Dalio, founder of Bridgewater Associates, warning of a once-in-a-lifetime breakdown. He sees interconnected cycles of debt, political turmoil, and trade wars converging, creating a perfect storm of economic vulnerability. The world's money scene isn't just taking a little tumble, it's practically doing a full-on earthquake dance. Ray Dalio, founder of Bridgewater Associates, says we're seeing a once-in-a-lifetime shakeup of how everything works on a global scale. Think money, politics, and how countries get along. Sure, inflation might have calmed down a bit, but the real problems are getting bigger. We're drowning in debt, budgets are totally out of whack, people are more divided than ever, and the global trade system, which used to be all about teamwork, is now splitting into rival groups with trade barriers. Dalio's saying, these aren't just separate worries. They're all tangled up and hitting us at once. Those rising tariffs, especially between the US and China, are more than just trade rules. They show something seriously off balance. The US has become less sturdy because it depends too much on manufacturing. Its money is easily shaken, and the middle class is shrinking. And Dalio's not holding back. We're not ready for what's coming. In this kind of mess, most companies, especially those tech giants that everyone's been hyping up, are in real trouble. Tariffs make things cost more. Sales drop, money dries up, and investors get burned. But here's a cool twist. While everyone else was throwing money at AI and those famous Magnificent Seven tech stocks, Dalio's company, Bridgewater Associates, quietly changed its strategy. Looking at his latest reports, he's put a lot of money into 3 energy companies focusing on clean energy and utilities. At the same time, he sold off some of those big tech stocks. Why? Because these energy companies can handle tough times, which is super rare in today's crazy market. In this video, we'll dive into the 3 energy stocks Ray Dalio is betting on right now and how they could fit into your investment plans. Before we jump in, if you're finding this content insightful and worthwhile, a like, share, and subscribe go a long way in helping us reach more viewers and continue delivering high-quality analysis. Let's reach 300 likes on this video. Your engagement truly makes a difference, thank you. Let's start with the first stock Ray Dalio has his eye on, Vistra Corporation, ticker symbol VST. This isn't your typical power company. It's a nuclear energy giant with a smart, future-focused plan. And Dalio's firm just made a huge move, increasing their investment by almost 59%, now worth over $244 million. Why? Because Vistra isn't just surviving the chaos of tariffs, debt, and market swings, it's actually doing well. After buying Energy Harbor for $8.6 billion, Vistra is now the second biggest nuclear energy provider in the United States, with 6,400 megawatts of nuclear power. This steady, low-cost, zero-emission power is exactly what those massive AI data centers need. Reliable energy 24/7. And with AI expected to boost U.S. electricity demand from 3% to 8% by 2030, Vistra is perfectly set to cash in. Did you know that Vistra, in its history, has roots that trace back to the Texas Utilities Company, which was formed all the way back in 1917? And there's more. The Inflation Reduction Act gives Vistra a great financial boost in the form of nuclear production tax credits, making its profits even stronger and protecting it from falling energy prices. Their business model, serving 5 million customers and running 38,700 megawatts of power, means they make money even when prices jump around, and they've got plenty of room to grow. Vistra is already signing deals with big players like Amazon and Microsoft, building solar and storage projects and keeping a large part of its future power capacity available to sell when prices go up. All of this points to a projected $7.13 billion in earnings next year and a potential 42% increase in the stock's value. Dalio didn't pick this stock to just get by in tough times, he picked it to lead the next big energy boom. Keep in mind, even if this stock seems like a good bet, don't just go all in. Do your own research, understand the risks, and make sure it fits your investment strategy. Oh, and if you've ever thought about adding gold to your portfolio, I've got a free gold IRA guide in the description below. I'll break down why it's worth a look at the end of this video. Now let's look at the second energy stock that caught Ray Dalio's attention. Constellation Energy Corporation, ticker symbol CEG. This company has weathered recent market ups and downs but is still on track for long-term growth. Dalio's Bridgewater Associates increased their investment in Constellation by over 23%, now owning nearly $212 million worth of shares. That shows real confidence. But what makes CEG so appealing right now? Even though the stock recently dropped 18% due to temporary worries about data center energy demand, CEG is stronger than ever. The company had a fantastic year in 2024, with earnings per share jumping 38% year over year and beating analyst predictions by 2.7%. Even more impressive, they did this while revenues were dropping by cutting operating costs by over 17%, mostly thanks to lower uranium prices. Looking ahead, CEG expects a 6.7% increase in earnings per share in 2025. But if they beat their own forecast again, like they did last year, we could see a whopping 23% increase in earnings. Meanwhile, the stock's forward PE ratio has dropped to just 21.9 times, meaning it's a much better deal. But the biggest reason to be excited is what's coming. Constellation plans to double its earnings by 2030, aiming for $18 per share and maintaining a 13% annual growth rate. That's pretty rare for a utility stock, driven by clean, steady, and in-demand nuclear power. While the market is distracted by short-term tech buzz, Ray Dalio is playing the long game. With a recovery already underway and huge long-term potential, Constellation Energy looks like a stock that's not just undervalued, but also misunderstood. Constellation Energy has nuclear plants that have some of the highest capacity factors in the entire United States. Finally, let's check out the third energy stock that Ray Dalio recently added to Bridgewater's portfolio, NRG Energy Inc., ticker symbol NRG. This company is quietly gaining momentum while staying under Wall Street's radar. Dalio increased his investment in NRG by an impressive 47%, bringing Bridgewater's total investment to nearly $17 million. And the timing is perfect. After a recent 10 to 15% price drop, NRG now offers one of the best risk-reward opportunities in the utility sector. Despite some temporary setbacks in the last quarter, like lower demand due to weather and maintenance issues in Texas, NRG reported adjusted earnings per share of $1.56, beating analyst expectations by 58 cents. And the company reaffirmed its full-year 2025 forecast, targeting up to $7.75 in earnings per share and nearly $2.2 billion in free cash flow. So, what makes NRG stand out? Well, it's a fully integrated energy company with interests spanning power generation, retail electricity, and even smart home technology, especially through its Vivint smart home acquisition. Vivint is exceeding expectations, with 200,000 new subscribers and rising profit margins, providing steady income and loyal customers. Now, here's the real game changer. NRG's position in the AI and data center boom. The company has already locked in 800 megawatts in initial agreements. Plus, they're teaming up with GE Vernova to develop a whopping 5 gigawatts of dedicated power capacity for AI infrastructure. This isn't just a future plan, it's happening now. And unlike some expensive energy stocks, NRG still trades at just 12.5 times forward PE, while offering a 7.65% total shareholder return, combining stock buybacks and dividends. For investors looking for value and income, it's a rare chance to get both strong returns and long-term growth potential in one package. Dalio clearly sees the potential, and any investor looking to capitalize on the next energy boom should too. So, what do you think? Are Ray Dalio's investments in these companies a future win or wash? Let me know your thoughts in the comments. As always, make sure these align with your investment strategy and you do your own thorough research. These stock plays are exciting, no doubt, but real wealth? That's built with a long-term strategy. And part of that strategy isn't just picking the right stocks, it's making sure your portfolio can withstand anything the market throws at it. Recent trade policies, including new tariffs, have introduced volatility into the markets, prompting investors to seek stable assets. That's exactly why gold has been a staple in portfolios for centuries. Gold has historically served as a reliable store of value during such times, with prices recently reaching record highs. It's one of the few assets that always has demand, no matter what happens in the economy. I've found a company that offers Americans a free guide that walks through exactly how to add real physical gold to their retirement accounts. No gimmicks, no obligations, just solid practical knowledge. Click the link in the description and grab your copy, because the best investors don't just think about the next year, they plan for the next decade.